we ready to go live on YouTube too? Okay, and we're live. Good morning, everyone, and welcome to another episode of the Crypto Hour. We have, as usual, lots to talk about this week, but also we just finished the conversation that we're having with Jonathan on the AIW's side about Cardano. So if you don't mind, guys, we'll also carry on a little bit of that conversation over here, because in particular this week, apart from the other things that we need to talk about, there's several news about Cardano. They are interesting, and we can also, as we're talking about these things, if you have any questions that came up to you during the previous hour, then drop them into the chat box, and we'll get Jonathan to answer them here as well. So I remind everybody, for those of you that haven't met him before, Jonathan is a stake pool operator on Cardano, a member of both the Genius U and the AIW community. And so we're very lucky to have like an insider in a way on one of the major crypto projects right here. And we were both last week at the Cardano Summit in London. So that's why we have lots of news to bring you and new initiatives that are in the Cardano ecosystem. But let me start sharing the screen and start going into some of the things to talk about this week. And sorry, you don't want to double speak. Okay, let's start going on to the start from the news and the economic calendar as usual, just to see what went on this week. The main funny enough, you look at all these economic news during the week, and some of the red the red things that where you should pay a little bit more attention. So we've had another interest rate rise in New Zealand, as expected, about 0.75 of a percentage point, and some economic news about manufacturing and so on across the Eurozone, the UK, the US. But the most important thing that people are listening to and that moves the market is the meeting minutes, the Monetary Committee minutes in the US. Let me just update this. I'm not quite sure if this couldn't see the whole thing for Friday. No, okay. And so this been on from the US point of view. Obviously, it's Thanksgiving. So like yesterday, the whole market pretty much ground to a halt. But what a lot of people are trying to understand it's what is the attitude of the central bank and the SEC towards the monetary policy. Okay, so the federal monetary committee is the one that decides what the interest rates are going to be set, what level they're going to be set at, and they came up with a kind of the usual announcement just before Thanksgiving to keep everybody a little bit of in a way a good feel. And the announcement was, and you can get it, you can search it up in the news anyway. If you see that investors brace for slower Fed hikes, so that means the announcement was that they are seeing the effects on the economy already of the interest rate rises, and they were saying that probably they don't need to now raise interests as quickly because they're starting to see signs in the economy that the inflation is starting to slow down. Now, so what everybody is expecting right now, we had 4 months of consecutive 75 basis point interest rate rises. Okay, so 0.75 of a percentage point. What everybody expects now for December is that interest rates will be still raised, but only by 50 basis points. Okay, so they're starting to slow the pace of interest rate rises. And this combined with inflation figures, it's what everybody is waiting for to then see an effect in the stock market. So news like this generate kind of like a good feel in kind of like companies that are considered in risk-taking sectors. And then they can plan for the future, because then they create a solid base that people can plan in, instead of not knowing what is going to happen and how much is going to cost them to invest in a year's time compared to what they're doing now. So there are two things that we need to consider, and that's why we're all looking at the beginning of next year when the market will start turning around. So everybody expects let's say a bottom to be hit in the next couple of months, and then we can possibly see the market turning around. Now, there are two things. One is the interest rate slowdown, in a way, the slowdown of the pace of raising interest rates. And the other thing is inflation. I mean, when you think about it, I know it sounds like years ago, but it was only in February that Russia invaded Ukraine. So, and that caused an incredible effect of like a raise of prices of oil and gas. And so that increase will then play out into inflation figures for 12 months from then. So what was going to happen in February is that the effect of the oil and gas increases on inflation would drop off completely, because now the price is no higher than it was 12. I mean, it is now, but in February is when the prices went up. So when you compare February 2023 with February 2022, there's not going to be that increase in cost in gas and oil. So the effect on inflation will be zero or even negative. Okay, so we should see figures for inflation going down in the US in the next few months, and definitely after February, and that then should kick a kind of like I'm not saying a boom, but we'll say an increase in interest in risky assets, and that obviously includes stocks and shares, even more technology stocks, and obviously crypto. Crypto is considered, a crypto asset, a risky asset class. So this is why this is kind of like good news. Not good news if you invested in the dollar, in a way, because people that have kind of like bonds will think that the good times are coming to an end. Kind of like the yield they can get from just the money market in the US will slowly slow down, and then eventually will start coming down. But it's good news for the economy as a whole. Now, so from the crypto point of view, and let's go on to I got trading view open already. So from the crypto point of view, this is kind of like a Bitcoin, and as you can see, we're all still in a kind of like still in that sideways movement that we've had since June. Okay, so nothing has changed. We hit after the FTX scandal came out, we hit a new low. So the price actually went down to 15,500. Now is kind of like idling in the 16,000s range. So between 15.9 and 16.8, not really doing much, because there are still big problems hanging on the crypto world, and this is because that's the effect of the drop off from FTX. Okay, so the fact that they filed for bankruptcy means that a lot of people have funds that were invested in FTX either as deposits or like as an investment that they can't get out anymore. So it doesn't just affect FTX, but it affects many other projects that have their funds locked in there and can't get to them. So one of the biggest one that could be affected, and this depends very much on how much panic there is into the market, is Grayscale. So Grayscale Trust, one of the biggest fund, crypto fund managers, and they might be forced because of liquidity issues to sell part of their Bitcoins. So what effect would that on price, remains to be seen. But we might have another violent leg down before the market starts recovering. If the Grayscale and the company behind Grayscale and the exchanges from the same company encounter problems and they can overcome their liquidity issues. So yes, FTX has gone down. It's taken down with it many other smaller exchanges, and even some of the big ones are affected. Now, on the out of all this, in a way, it's Binance is trying to portray itself as the knight in shining armor that's saving the whole industry. Okay, and one of the news is that was announced is that, and we talked about this a little bit last week as well. So Binance says it will set up a 1 billion recovery fund for these distressed crypto businesses, or to help businesses that find themselves into liquidity issues through no fault of their own, because some of these projects are perfectly viable, perfectly good projects, but they've been involved in this because the public has lost confidence in crypto because of this, and they might need just a hand, temporarily to get through this before they can start operating as normal. Okay, so this is kind of interesting news. What we don't know is any details, because whether it's this an altruistic move where it would actually help other projects, or if he's trying to buy other products on the cheap, remain to be seen. Anyway, they did say that they're going to have 1 billion BUSD towards this fund, and said the commitment may even increase to 2 billion depending on need. So let's see how it goes. But definitely it's a good announcement in a way that brings a little bit more stability to the whole crypto business right now. And but it's still, at the moment, it's still very fragile. Okay, so it's difficult to say when this will actually finish exactly. But I will cover different news so that we can understand other aspects of it. This is kind of quite important as well, although Belgium is a small country, but they've taken a view that's completely different from the one from the US, for example. So they were saying that so there are certain conditions for a crypto asset to be classed as a security, in contrast to the view of the SEC and Gary Gensler. So they confirm that cryptocurrency that are issued solely by computer code do not constitute securities. Okay, so so this is they gave this opinion following an increase in demands for people to know exactly what their stance was and how they should consider their assets. Okay, it's not legally binding either under Belgium or European law, but still it's a educated view on how they see cryptocurrency, and certain cryptocurrencies rather than others as securities or not. So this doesn't apply to all cryptocurrencies, but the ones that were issued so just by computer code and without an expectation of gain, at the outset. So it's a positive move anyway, and it starts giving a little bit more clarity, although it still leaves many unanswered questions behind on how everything else is going to be considered. Is it like, are Bitcoin and Ethereum the only cryptocurrencies that will not be considered securities? So we will see. I think what 2023 will bring a lot more clarity towards regulation. And I think, to be honest with you, I think it's also it's due right now. So we need some clarity about stable coins. We need some clarity about central exchanges and so on. So this is going to come, and it won't be a day too soon. Now, one thing that's followed as well, the FTX debacle, is that many exchanges now are starting to publish these proof of reserves. Okay, so to prove that they are actually collateralized and the money that you've deposited is actually still there. So they launched, this is OKX, which is a crypto exchange, again, centralized crypto exchange, yeah. It's launching a new proof of reserve system that enables customers to verify their digital assets. So their system, at least this is what they are saying, again, I know that we haven't tested it in any way, but they said they have this system that so users can verify that their funds are backed one-to-one by real assets. Okay, so this is, it's not interesting so much because I'm telling you about OKX, but because it's a trend now where obviously this has affected a lot of other crypto exchanges, you know, apart from FTX, that maybe have nothing to do with them, but it's the trust in these businesses that has been affected. So this is why they're doing all this, to restore some of that trust. And so we can see now, this is Coinbase as well. So they reveal what their reserves are like. They had like 2 million Bitcoin, worth like $33 billion. But everybody's being forced to tell you, well, actually, yes, we're okay. If people want to get their money out, they can, because we are backed by solid reserves. And this is what's going on right now, because as I say, so you can understand if the main crypto businesses like Binance, Kraken, you know, Coinbase, are forced to show their customers that their money is actually there. It means it's quite big. And if you know, Amazon and Netflix get involved, you understand how big it is. So apparently, Amazon has won the rights from Apple to produce a series about the FTX disaster. So obviously everybody's talking about it. So why not make a television series out of it and make some money out of that as well, even if Amazon is not in crypto yet. Okay, but why not? One of the big news before we go on to Cardano and then continue the conversation that we're having before, just a couple more things. Okay. And this is the thing that we should all consider now, that one thing that's been done, the MetaMask is changing its terms and conditions. And as part of these new terms and conditions, saying that they will start collecting your IP address, connecting with your accounts. You know, and this is, again, guys, why is this important? And what can we do about it? Okay, why it is important, because this is, you know, deemed to be a decentralized asset. They shouldn't have any of your details whatsoever to share with anybody else. Now, obviously, you know, they say, well, but we're not going to use this data and we just store it temporarily. But this is, you know, not what was agreed in a way when you downloaded your MetaMask app. Okay, so I will say, what, you know, the fact that your data is stored somewhere then raises the question, you know, is it possible that they're going to use this data to pass on to anybody else, like you know, institutions like governments and so on? So it makes me very uncomfortable, and we will see. You know, there is a way of changing your access. You know, it's called an RPC provider. So the way that you can connect to the Ethereum blockchain, instead of using Infura, which is the way the normal what's it called, the standard provider of access to the Ethereum blockchain, you can use a different provider that will not will not keep your information. Okay, and we'll you know, I'm not going to do it now, but there is a way. We can show you on Monday how to change your RPC point on Ethereum. So it's something that by the way, I mean, if you want to do it right now, there's lots of videos that show you how to do it. So just Google it on YouTube, and you'll see how, you know, the steps to take. Okay, Jonathan, shall we carry on the conversation then about Cardano? This is kind of like, for those of you that were not on the previous hour, probably the biggest news coming out of last week was that the commercial arm of Cardano Emergo is launching a 100% collateralized fiat-pegged stablecoin on Cardano called USDA. And this will allow you to go completely bankless in a way. So it allows you to change your dollars for USDA without going through a crypto exchange. So what you do, you open an account with this entity, completely decentralized, and you deposit USD from a normal US bank account, and you take out USDA, and you do with it whatever you want on the Cardano ecosystem and any other ecosystem that may adopt it later. And then when you want to get the money back in your bank account, you just do the reverse. Deposit USDA, take out USDC. No need to use Binance, no need to use Kraken, Coinbase, or anybody else. So completely taking charge of your own finances. So this is very big news for having kind of like we need stable coins on any ecosystem and we need assets of all sorts, for creating a financial system that is stable and it's healthy. So this is absolutely massive news, and there are also other stable coins. Jonathan will tell us launch on Cardano, and at the same time, probably these launches we're going to have the algorithmic stablecoin DJED also launching. That is a different concept. And so instead of being collateralized by dollars, is collateralized by crypto assets, and keeps the peg to the dollar that way by holding in reserves and more than the value of the dollar in crypto assets. So it's an over collateralized stablecoin. And the other thing that came out of last week was the launch of the sidechain Midnight on Cardano, which is a privacy sidechain that will allow people to control what they share with different applications, and not having all their information available online as it is right now. If you have a bank account, if you have loans, if you have a mortgage, anybody can check your details. That has a financial license, and they know absolutely everything about you. So what you spent, how much is in your bank account, if you kept up with the payments on your credit cards, if you missed any mortgage payments, 12 years ago maybe, or something like that, they will know. Okay, so that's, for me, is not right. Okay, so being able to share what you want rather than everything, it's, I think, very, very important. So we can get Jonathan to talk about more about this, or I don't know if there are any questions. Let me stop sharing because for some reason I can't see the chat box. Were there any questions from a previous hours that you want to bring up? Anybody?
Question in chat. Why not collateralized by gold, silver, or commodities, or Swiss francs? A Swiss-based company, one-to-one bank, but no belief in US dollar. Yeah, it's a conundrum and a state of where we are currently. So, and that's really the biggest argument for more than just USDA or USDC or USDT or USDM, which also exists on Cardano now. So you've got collateral-based stable coins, which have a one-to-one backing with an existing fiat world currency. But really, we want to get away from that. Ultimately, we need something that is not based on fiat currencies, but is based on something more robust, either like gold or a selection of other cryptocurrencies. So if we're fully trusting in the ecosystem and the cryptocurrency ecosystem, we want to have those other cryptocurrencies provide the collateral to create a stable coin amongst them all. And that's sort of where the efforts like JED and Sigma USD are heading towards. Now, I hate to mention algorithmic stable coins without the glorious cases like hopefully JED and certainly Sigma. But you know, in the same breath, you do have to mention Terra and Luna. There are severe risks with any stable coin that is not collateral backed at the moment. So JED uses a combination of ADA as the underlying currency, and that's considered the stable one in this sort of pairing. And then you have Shen, sorry, I forgot the name for a second there, which is considered the volatile half of this sort of pairing. And so you will have people coming into that stable coin to support the infrastructure by holding either JED, ADA, Shen, and I think even Coty is going to be involved in some way, shape, or form too. And you've got Chainlink as well, an ecosystem, and all these are working together to create this sort of algorithmic stablecoin. Basically, the value, the peg is kept to, and it's pegged to US dollar purely because that's the reserve currency at the moment. So that could equally be swapped out for gold or for anything else that we know and trust the value of at that point in history. So at the moment, US dollar is the reserve currency, is most powerful.
And that's the point. Is like so that can be changed very easy once the concept has been established and we find something that works. You know, and this is what Coty has been worked for all these months in developing DJED to find an algorithm, you know, that is solid and that works. And at the moment is, you know, as you say, Jonathan was saying, will be connected to the US dollar, but you know, the concept can be connected to anything else really. And we want, so that's going to, you know, what Cornelia were talking about, you know, and there are example stable coins connected to assets that are other than the US dollar. So there are also on the market, there are gold stable coins, there are euro stable coins, yen stable coins. So it's not just US dollar, but obviously the US dollar are the ones that have more liquidity. You know, so this is why everybody that trades anything in crypto uses generally USDT or USDC. You know, USDT being probably it's the most liquid one, but any stable coin brings extra liquidity to a particular market. So that market can be, you know, Ethereum, but can also be, you know, Cosmos, can be Cardano, can be Polkadot, any other market that is out there. So and I think I'm interested as well in the connection between the launch of the Midnight you know, sidechain that we're talking about just shortly on the other call, and the Cardano identity solution. So are the two, you know, I know it's very new, so probably you don't have the details of all those, but kind of how the two link together and what it means for you and me and for everybody else that, you know, about their identity and what's the vision of Cardano for that in the future.
Yeah, for a whole load of stuff online, we need to have an identity record that's healthier than the one that's currently used, which typically is either a Google account or a Facebook account or Amazon or Apple or whoever it is. And these are like centralized entities that hold all your data, and we're trusting with it at the moment. And you know, that is fine to an extent until it's no longer fine. You know, because it's a short trip from a centralized entity holding all that data about you to a you know, hate to point fingers, but you know, for example, China, its government system is very authoritarian over its community and its nation because it has the ability to be. So all the data goes through, like all their internet data really goes through WhatsApp, WeChat, which is like a nationalized service, really. So like we used to have nationalized services like rail and so forth, and electricity. that's kind of nationalized in China, and so you've got that power over the data to the extent that you can apply things like social credit systems to whoever's involved in that ecosystem. So China, if you litter, your social credit score drops. If you are off for more sick days than is warranted by the state, then your credit score, your social credit score drops as well. So there's a whole load of decisions being made about what's wanted and what's needed in society that is not about the individual. It's about the best thing for whoever's in power. And this effort to create Bitcoin are now evolving into this whole ecosystem of privacy chains, as well as data chains, as well as identity, is really trying to remove the control of that, because it kind of has to be there. We kind of need to be able to have our identities to hold up and show people at certain points in time, but we need to have something that removes the power from the centralized entities, whoever that may be, from actually using it, holding it, and holding that power over us. And so with Cardano, this has all been thought about from the ground, from the grassroots level, and has been as part of the roadmap. So they've got Atala Prism, which is their identity solution, and this is a decentralized identity solution, which is very different from your Google ID or your passport ID or something like that. The data in it is held within that self-custodial, and it's kind of like a wallet. So you take you create your digital wallet. Inside you put your driving license, your passport, your or your KYC kind of information. But instead of that sitting in a credit score database or with your government, it's actually sitting in your hands in your self-custodial wallet. So the only way that anybody can get access to the data that's within it is by you giving it to them. And the beauty about it is that it's designed so that you only show the bit of information that is relevant to that conversation, that transaction you're making at the time. And then that is then, if they're good actors, deleted. They've proved that you are worthy to participate in that transaction, whatever it is, and then it can be closed. And so the Midnight chain, side chain, is really taking that approach as well, in that your financial transactions or any transactions that happen, really it's privacy first. So the transaction is hidden, nobody knows about it unless you reveal information about it. And that kind of is a bit like the tax system, how that works in an ideal tax system in a countries where it's all based on honesty. So if you go to work and you're receiving a wage, then the company that you work for will reveal your earnings so that the tax can be collected. And that's an ideal system. Reality, we know that it's just taking our hands off the wheel of that decision, and money's being funneled without, and you're disadvantaged by having the tax taken off at the beginning, and all sorts of issues. And the power corrupts and twists the system until there are massive winners and lots of losers. So actually, we design things like Midnight, we design things like Atala Prism, decentralized identity, and we've got the infrastructure of replicating our real world historic legacy systems in a new decentralized power to the individual type way. So yeah,
and kind of there are some, this is important because these are kind of real-time uses for crypto. So just to give a simple example, I mean, like you imagine a boy that goes to a store to buy a beer, and needs to prove that he has the legal age to be able to buy alcohol. Now, if he had what we're talking about, one of these identity solutions, he could just basically tap his phone, and that phone would prove his identity and would prove that he is of legal age to be able to complete that transaction. But the shopkeeper doesn't need to know his name, his address, where he lives, etc., etc. It just needs to be satisfied that the transaction can be completed. So it's a kind of like a need to know basis rather than like a blunt instrument to the moment. If you need to prove who you are, you need to show documents. They have a lot of information on there about you. So it's a welcome step for a day-to-day life. It's not really for, worry that people may use it to do illegal transaction and things like this. It's the Cardano solution as also compliance as part of the build, hasn't it, Jonathan? So it needs to have you need to be able to share information with authorities, etc., but only what they need to know, not everything.
Yeah, and the whole sort of technology behind the ability to do this is called this zero knowledge proof, and so it's come out of the mathematical sector of academia, and it's a way to, and it's very young. It's only become an actual workable proof in the last decade or so. The ability to take some information and show that so the equivalent is like, okay, this guy in front of me is trying to sell me a Rembrandt, and I need to know that he actually owns that Rembrandt before I'm willing to hand over my cash. And so, in a equivalent way, he might say, okay, well, I'm not going to reveal to you the whole picture in my hands. I'm going to reveal to you a portion of the picture that you ask me. So I can say, okay, show me the signature of the Rembrandt alone. And so he'll take a sheet of paper with a hole in it and hold it over the painting and say, okay, look, there's the signature, and that's the proof that I need in that situation to know, okay, I asked him to show me the signature. He's been able to show me, I can see the paintbrush, the brush strokes a lot. And so that's like without him revealing the whole information, he's shown that he can answer a question about that painting and show me the bit that's needed. And so we've created that in a mathematical sense, in a cryptographical sense, that actually we can have portions of the information revealed without revealing the whole lot. And so that's then translated out into real world data, like so we can go to an exchange and we can show our passports and our bank statements and so on and so forth, and that one entity then has all that information, and that doesn't necessarily need to be something like an exchange anymore. It can be a trusted authority that's recognized globally but is far smaller or far more local to you. So it might be that you have a network of trusted entities that all they do is hold and that data and can't make money off it. So it's a charitable thing. It doesn't even have to be the government that's holding this information. We can create trusted bodies. So universities can step in and hold the credential information, or be the trusted body for university degrees. Something that makes sense. It's contextual and makes sense for those things.
Yeah, there's a question here on the chat by Cornelia, which is, by the way, I think you got it in one pretty much, Cornelia. So decentralization combined with backing with our hard assets could be the combi to change crypto from risky to most logical wanted assets. Why Cardano not filling this hole in the market immediately? I mean, yes, Cornelia, you got it perfectly right, but this is exactly what Cardano is doing. It's just that, you need a little bit of patience. Rome wasn't built in a day. But this is exactly the way they are going. And the reason why we're talking about Cardano so often is because one of the few projects out there that has put the underlying groundwork to be able to do these things safely. And because if you want to put your house on the blockchain, which can be done now, you want to make sure that it is safe and nobody can come and, like a hacker cannot just come and steal it from you. Okay, so these things take time. They need not just work from the crypto point of view, but also commercial integrations then with authorities and with providers of information, so that it is safe and it is solid. The system is solid. Not so much the Cardano idea, but the actual system that you will use then as a user, you really don't care. And as long as something works, you don't care who provides the solution. But whatever solution you're using, you want to make sure that it's safe and does what you want without you risking anything. So I don't know if you would like to add to that, Jonathan. This is my view of it.
Mm-hmm.
May I add something to my question, please?
Yeah, sure.
Yeah. What I would think is, because I consider these stable coins, I'm really, I have a lot of questions about them. Who created Tether? Maybe I don't know enough about the stuff, but for me, the whole concept of stable coins, since the Luna Terra disaster, and since I don't trust USD as a hard asset, the whole stablecoin concept for me is a risk in itself. So couldn't getting into USDA actually lead Cardano to complete disaster in a stablecoin disaster, since they are inherently not the stable thing that we would like to have? They would be a great risk.
They're just a go-between, Cornelia. So what you need to understand, what stable coins are almost like a money exchange. If you think when you go on holiday, you exchange your local, your currency for the local currency, and that's what the stable coins are designed to do, to move assets from one place to another. It doesn't mean that you need to hold stable coins. Once your stable coins are in crypto, you can then use them to buy any assets that you prefer to US dollars. But the point is that you need to get you need to get your spending money there first, and that's what stable coins do. So I agree with you. I'm not keen on holding US dollars as a store of value, and as we can see, history has proven to us that that's not the best way of keeping your value. But you need a way of moving your funds from A to B before you can invest in whatever you want to invest in. Okay, yeah. So that's how you should say stable coins.
I understand this concept, but why then, since there are already gold-backed, the concept of a hard asset-backed crypto exists, and it really feels like a sort of missing link in the whole Cardano brilliance, it would have been a logical step for me to have your hard asset-backed, at least why not make it Swiss franc coupled?
Well, you can do anything, but how do you buy your hard asset in the first place? Mm-hmm. You can buy, at the moment it's very difficult to buy anything with gold or buy with a physical hard asset. So it still needs to be that translation from A to B, and you need a conduit for that. If that conduit is the US dollar or the Swiss franc or euro, it's the same thing. The process is the same. It's just how to get the value from your wallet to another asset, and that, nowadays the modern system, up to very recently, until cryptocurrency came along, currencies are the only way used for international trade. So you basically, in a way, and this is the fiat system. So you've been forced to use these things called currency to transact, because countries have basically made anything else illegal. And so you've been forced to do that. The only options you have, if you're not doing this, is to use a physical asset like gold, like silver, like a precious metal. But that brings different sorts of problems, because it's not that easy to then transfer. You need to meet somebody. You need to send. Sending gold across the world. Who can guarantee that doesn't get lost in as you shipping it from A to B? So that's the thing. So you're not, in a way, at the moment, at least in this system, the currencies are a necessary evil, and crypto is trying to then come up with solutions that are alternative to that. And this is in particular with algorithmic stablecoin is probably the main solution that is working in that direction, to replace, so that we can interact without being connected to dollar or euro or anything else. We just interact with crypto. And once we move your dollars, that boom, the dollar doesn't exist anymore, is now a crypto asset, and moves in the crypto system without any need of being converted into dollars at all. And this is what this is what we are waiting to see, is not just from the asset point of view, but the point of view of the point of sale. So the moment that we easily will be able to spend these crypto assets, whatever they are, whether Cardano, Bitcoin, Ethereum, or anything else, directly in the shops to get what we want, then we will we'll eliminate the need to have dollars, pounds, Australian dollars, whatever you have, because you can spend your crypto directly. You see, but you still need at the moment an exchange, because we all, in the whole world, everybody stores their value in currencies. So you need a way of translating those currency into, whether they are digital assets, and this is what stable coins are helping with, that transition from the fiat world to the crypto world.
Mm-hmm.
So do I hear you say that the stablecoin issue, if we had a stablecoin we really trusted in, say an algorithmic stablecoin, do I understand from you that the Terra Luna disaster is a programming problem, or is it a trust problem, or how is it a mathematical failure that it worked like that, or is it something else?
Yeah, it's a programming issue. So basically, the Midnight team in Cardano, again, they went the rigorous academic proof, peer-reviewed approach. So the maths papers for this mechanism for creating a stablecoin had been out there for a couple of years. And in fact, Charles Hoskin said in one of his keynotes is that if you want to hide something, if you want to keep it really private, publish it in a maths paper, because no one reads the things. And the team that built Midnight, because again, it's all about creating models and mechanisms to gauge the success of a program before it launches. So you have test nets and preview test nets, and then you fire market conditions at them. They did this for stablecoins, all the stablecoins, and predicted the Terra Luna disaster in advance. And so the team were in two minds as to whether ethically they could then go and short Terra Luna before the collapse. But they didn't. They just told everyone that it's not. They give no backing, no credence to that as a technological platform. However, they do give credence to their algorithmic stablecoin using this protocol method, and again, they've done that in a test environment, and it's proven itself. But then you need to try it in a real environment with real money, with real humans, because humans are the problem. Humans will mess up any system. I give a fully functional phone to my mother, and somehow it's broken by the time I got it back. Except it worked for me. It's a strange idea. But anyway, they've done that with the coding framework around the Midnight stablecoin. Sorry, not the Midnight stablecoin, around the JED stablecoin, by creating it in on the Ergo blockchain. So that's been around already, been trading since before this last bull and bear markets as Sigma USD. So they have this algorithmic stablecoin that's using the same balancing mechanisms to keep the peg to the dollar, running on the Ergo blockchain on mainnet, so running with real value exchange. So it's a microcosm, but compared to the size of Terra Luna and Cardano now, but it's proven itself through a bull and a bear market to date. It's held the peg really successfully. So they're hopeful that the science behind it is robust enough for JED to have the same sort of success in bull and bear markets. This will only be borne out in time, and it's like anything. Software improves over time. You have more and more scenarios thrown at things. People work ways to create new viruses and new methods of attacking it, and countermeasures that are created. So it will see with time. But all these stable coins are a stopgap. The way I see it, they're just here while we're interacting with the fiat world. Gold-backed stablecoins, and there's several being worked on in Cardano as well. So I dropped a link in the chat to Meld. The team from Meld are creating one PAX-G. But again, with gold, anything that's not actual gold is not gold. You're saying it's you fractionalize gold, but it's not gold. You don't know if the gold is really backing it unless you've got that gold in your hand. And gold has been sold, the volume of gold that's sold is far, far greater than the volume of gold in the world. So can it be trusted? Not really. Can a stable version of gold backed, can it be trusted? No, not really. So we know we are where we are. We deal with the conditions that we're in, and
Are there any property-backed stable coins or coins?
What's the value of a property, Cornelia?
Yeah.
What's honestly, how do you say?
At least it's there. It's there.
Yeah, it's there, but how do you know how much it's worth?
And if there's a property market crash,
So you see, everything is, all the cryptocurrency, Bitcoin is the first example of absolute scarcity that's ever been invented. And that's the genius of it, because even gold, gold at the moment has an inflation of 1.5% a year, roughly. Okay, which is the new gold that's being mined and brought out into the market every year. Now, if technology improves, there are vast reserves of gold that is not commercially viable to dig out at the moment. But if that technology improves and becomes cheaper, nobody's saying that gold could not inflate at 10% a year, 20% a year. Elon Musk is talking about sending a rocket to asteroids that are made, a big percentage of it is made of gold. So we might have, like just thousands of tons of gold, at a place where it is would be theoretically be possible to mine. What would that mean for the gold market? So how stable is gold in the long term? It's only as stable as this, and this is for any commodity. So this scarcity is only in current technology conditions. Tomorrow, 5 years, 10 years, the things can change completely. Just if you remember, in the 70s, the 80s, everybody was saying we've only got 20 years worth of oil left in the world. What happens now? The reserves of oil now are much higher than what they were 30 years ago. So what's happened with this oil? Where did it come from? It didn't come out. It was already there. It just the technology has improved to be able to access it. And that's the thing. So we got so many resources that are available to us, but just that we're not good enough to be able to get them out and use them. But things change. Whether Bitcoin is a mathematically proven concept, and the scarcity is determined by code. So that's the maximum amount of Bitcoins that will ever be in circulation, and same for other cryptocurrency. They've got maximum issuance like Cardano as well, and so it's absolute scarcity that cannot be altered by anybody. And that's the power of it, and why many people, including myself, think that could create the base, cryptocurrencies, whether it's Bitcoin, Cardano, or others, could create a base of financial system, because at the end it cannot be influenced. One of the characteristics of money, before it was kind of like standardized in the modern fiat world, is that nobody could influence the issuance of it. And this is why gold has always been selected as the basis of currency systems, because it's something that's valued all across the world, and it's not easy to produce more of it at a cost that's considerably lower than actually buying on the open market. So that's why gold is and that's the difference with fiat money. Can be easily, the government can just decide to print more, so it's not safe from that point of view. And that's one of the main characteristics of money. So for me, crypto is the future from that point of view. And we can all see in the news, we're all coming to the current financial system crash. Whether it happens in 2023 or 2030, we are going to get there. The question is, what's going to replace it? So
very interesting. Thank you so much.
Yeah. No worry.
And you say Bitcoin maxi is the way. Yeah, well, it kind of is. Bitcoin is the oldest, most mature cryptocurrency, the most reliable store of value out there at the moment. However, technologically, it's got more technical depth to it in terms of moving it around and exchanging it, because it's operating only, well, it's not anymore, but you think of it as only operating on the Bitcoin blockchain, but actually those 21 million Bitcoin that will be produced, ever be produced, they can move between chains. So that store of value doesn't disappear if it moves from the Bitcoin blockchain to the Cardano blockchain. So so long as they create the robust porting, bridging technology so that it can really disappear from the Bitcoin chain and appear on the Cardano one, then there's no reason for that not to then be as trusted, because it's circulating on the Cardano blockchain, than it was on the Bitcoin one. So that's where I see the future, is that actually these stores of values will never, once they're created, once they're operating, once the work has been done. And in the case of Bitcoin, it's billions of compute cycles, loads of trees burnt in creating electricity to generate that value. That's where its values come from at the moment. That will just then be immortalized on other chains.
And that's where a lot of the work is going on right now, to make sure that those portals are safe and secure, isn't it? Kind of the bridges. And that's where we had many hacks in 2022 and in 2021 have affected bridges, because this is where a lot of the crypto coins are stored. So it's kind of like, if you think about crypto, it's still a system that's quickly developing and is becoming more, adult in a way. But it's incredibly complicated, and there are so many moving parts that will need to work together. Because this is the stuff that we're going to use in the future to run entire financial system, countries, elections, and things like that. So we need to be like bulletproof. Mitch was asking, can the supply of Bitcoin ever be increased through code change? Yes, of course it could, but you will need a majority of the community to vote for it. And just thinking, what would you vote to make something you hold less valuable? That's the question. So it doesn't make sense. So it could theoretically be done, but it wouldn't make sense to do it. And the Bitcoin community is so protective of something like deciding anything to be done in Bitcoin is like a major thing anyway. Even things that everybody agrees that should be done take years and years and years to be done. So, yeah, the mechanism to achieve consensus is not easy in Bitcoin. They value their stability more than anything else.
And I value them for that,
Yeah, exactly. So it does one thing, that thing it does well, but yeah, that's where it stops pretty much. If you want different things, you go somewhere else. Yeah. Okay, guys, any other questions? We're coming pretty much to 9 o'clock, so we've the end of the hour. So we'll answer a couple more questions if there are, or otherwise I will again recommend, Jonathan, you had a lot of talking today. So an hour before now, and then you're going to have your own session. As usual, if you haven't, I would encourage you to follow Jonathan's session on Cardano, which he does every Friday at 9:30 on Discord. So if you don't mind dropping the link, so any new people that haven't interacted with you before can also find you. And it would be just give him 10 minutes to get a cup of tea and refresh a little bit. We've been going for 2 hours now. And the other thing I would say, for all you might already heard before, for those of you that are into AAW, we have connected with several good projects in Cardano, and we're actually thinking of starting a regular, either monthly or fortnightly session introducing some of these projects to the community as well. And we just need to agree with Mark and Billy and Paulina the date, but the first one will probably come next week. We've had a session yesterday with this project that's going through a private sale and is backed by the commercial arm of Cardano. So very interesting project. And we'll be bringing more projects to you in the future, connecting with the community and getting some of another one that we talked to, for example, is a project that does, some artists, they have, it's an NFT project. They also do NFT staking and NFT yield farming. So a completely novel approach. Okay, so keep following what we do, and we bring then ways for you to get involved as well. And we're working on the community system to be able to do it together.
Okay. Luca, just a quick question on my MetaMask question. Should I apply that change, the switch around on the words in the seed phrase in the problem account or into another account, like in the Chrome browser or another browser?
Well, you're talking about you're trying to recreate your wallet, the old wallet. Yeah. You can import. You can either just recreate MetaMask on another wallet and try with. So for those of you that don't know, so we can use this for everybody if you don't mind, Tim. So Tim has the problem that is deleted his MetaMask wallet, and then when he's used the seed phrase to recreate it, it does bringing up a different account number instead of his old account number. He can't get access to his old account number. So the one thing, and by doing some digging, the one thing that other people have seemed to found is that they maybe either written down one of the words of the seed phrase or written down in the wrong order. So as they come in rows, normally, what we try to see if it works is that if it by mistake you've written them down in columns rather than in rows, that would have created a different order of words, which would be related to a completely different wallet. So this is what we're trying to say. Do it on a completely new one, probably, Tim, on a browser that you don't use at all. So you can just dismiss it if it doesn't work. But if it works, you know that then your passphrase, your seed phrase is right, and then you can then use it again on your favorite browser.
Right, thanks.
Yeah.
And did you have a talk with the guy from Missum yesterday? You were going to have a talk?
Yeah, we did, and it's been published. I believe that it's on Discord, so you can watch the old discussion we've had with him. Everything is open, guys. We don't keep anything hidden. Okay.
Oh, that's fantastic. Yeah, I didn't know.
No problem. Okay, guys. So goodbye, everyone. And we'll see you again. For those of you that are part of my mentorship, I'll see you on Monday. Otherwise, next Friday. And switch off, go and get a cup of tea, and then connect with the Jonathan session on Discord. Okay. All right. Thanks. By the way, thank you, Jonathan, for helping us all to understand more about Cardano and for your being available for all of us. We're all grateful for your contribution. Okay. And if you are Cardano, guys, just go and stake it with Jonathan. Okay. That will stay in your wallets, and you get your rewards, and you'll help Jonathan as well. Okay. So
absolutely.
See you later, guys.